Hi guys, welcome to the Savvy Money Show. Me, your host Sean. You still have time to use the referral link to Freetrade to get a free share over $10. It only costs you $2 deposit, so why wouldn't you? Now, let's get on with the show. There'll be more about that later on. We're going to be talking about value stocks with dividends. We're going to start with the lowest one, which is a 2.23% dividend, Pitney Bowes. But it's a 1.5 billion market cap against 3.5 billion enterprise value. Price to sales is 0.4. We're going to move on quickly because I hope to get it all in one video. If not, I will do two videos. We have Enable. I've spoken about it before. It has a 9% dividend. It's a 4.1 billion against an 8.79 billion. Remember, Energy Transfer have agreed terms to take it over for 7.1 billion. Sorry about the background noise. I am outside. Its price to book is 0.6. Price to sales 1.47. With oil and prices it is, I don't know why you wouldn't. CBD. Now, don't get confused by the name. It's not a MJ stock, it's a grocer. PE of 4, dividend of 5, and a 2 billion market cap against an 18.5 billion enterprise value. Now, they're saying the forward PE will be 24.97 because they have just made an acquisition, which helped with distribution. Price to sales is 0.04, price to book 0.15. You can't really get much better than that. I've done other videos on that in the past, so I'm not going to go too much. Now, I've talked about NNA quite a bit. Now, another one under the umbrella is NMM, which is Navius Maritime Partners. Doesn't give as big a dividend as NNA, but I think you'll see why when you look at it. 0.67% dividend, PE ratio of 7. It's another tanker one. It's 634 million market cap against 1.36 billion enterprise value. PEG ratio 0.09. Forward PE 2. Price to sales 2.5. Price to book 0.57. Now we have DHT. This is a tanker stock. When everyone was going into NAT in 2020, I said no, I'm going into this. It's the best balance sheet of any tanker stock. 1.1 billion against 1.64 billion. Trailing PE 5, forward PE 10. That's because some of the contracts, they went on a 12 and 24 month contract during the Contango, which was an amazing deal for them, and some of them come to an end. Price to sales 1.95, price to book 0.99. Yeah, I do love this company. Some places will say 33% dividend. This says 2.5% dividend. Why? Because it said the same thing up until October time, September-October time, until they declared a 42% dividend in the second half. We have AEG, which is Aegon. I've spoke about this before. 3.19% dividend. And we'll see how it has a 9 billion versus 1.3 billion. But don't let that fool you. Price to sales is 0.12, price to book 0.37. All of these, the financials are good on them. But please do your own due diligence. Don't rely on someone like me. ELP has a PE ratio of 20, a dividend of 1.19. 16 billion market cap against the 23.5 billion enterprise value, and has a price to sales of 0.86, price to book of 0.87. Now we have Sachem Capital Group, ticker symbol SACH, PE ratio of 13, forward dividend of 8.89. Now 134 million market cap, 252 enterprise value. forward PE of 9.76. Now, price to book of 1.4, price to sales is high at 10. We have Telefonica, symbol TEF, which gives a 9.84% dividend, PE ratio of 12. Now, market cap is 26.5 billion against 80.8 billion. Has a price to sales of 0.62, price to book of 2. Now, don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to $200, depending on the platform you use if you deposit a small amount. Capstead Mortgage Company, CMO, a PE ratio of 8, a dividend of 9, which you will still qualify for, and $635 million market cap against 7.74 billion enterprise value. So if Rocket Mortgages is correct and they are going to be hit hard by what's to come in the next 12 to 24 months, you at least have enough of a wiggle room for them to survive. You have trailing PE of 8, forward PE of 9, PEG ratio 0.97, and price to book 0.97. LFT, Luminant Finance Trust. Now, 8.61% dividend. It's this is one which is a bit difficult to measure because you can't just use Yahoo Finance. They're talking behind the scenes about what to do. You have 105 million against 541 million. Forward PE of 10 because they think they're going to be profitable, which is why they're paying a dividend. And you have Annaly Capital Management, to the symbol NLY. Now, it's dividend of 9.44, which you qualify again. PE ratio of 3. 13 billion against an 18 billion in a market cap versus enterprise value. Forward PE of 8.55. Price to sales of 2. Price to book of 1. Now, we're going to move on to ones that are not as good value, but anto.l, anto. 95% of their profits come from copper mining, and with more EVs on the road, more batteries, we expect copper to be more in demand. With inflation, we expect copper prices to go up. Now, it gives a 2.72% dividend, which I expect to increase, and it's a 14 billion against 16 billion company. Price to sales is 2.74. Now, remember, I said anything under 4 is a good company, and you'll see it's got 16.5 billion in assets against 6.5 billion in liabilities. TJX. Now, why do I like TJX? It's 1.6% dividend. Now, it was one that wasn't exactly a fan. It got hit by the Rona. But it's still a 78.5 billion market cap against an 84.5 billion enterprise value. Now, people are talking about high PE, but they predicted forward PE of 20. I apologise about background noise. I will be going inside in a minute. Has a PEG ratio of 0.4. Price to sales of 2. Why do I like TJX so much? Because remember, they're the parent company of TK Maxx. Now, the way to look at it is a lot of these retailers have gone out of business, so they have stolen market share. And when you're a budget retailer, if you're still in business, you will still have a loyalty base. You don't have to market as much. 30 billion against 24 billion. Now, Associated British Foods, we can see the dividend isn't worth talking about at 0.27, and again it's the same reason with it's the same reason as with TJ Maxx, because they operate Primark. Among other things, they have a whole moat of companies, and at 18.4 billion against 21.4 billion. Now, they've been conservative, I think, in their reporting. They haven't reported a forward PE. They don't think there's going to be a forward PE, and for a while, because they don't know what's going to happen. There's a price to sales of 1.46, and I put it in here because although the dividend is, let's face it, it's a nothing dividend, I do think they will raise it, and you will see how during this time they have kept their assets stable, and their liabilities, they've reduced them. And if you go back to any Primark at the moment, you'll find it packed. It's one of these things. I have family who are in the fashion industry in Italy, and whenever they come to the UK, they stock up at Primark because of the value. Anyway, don't forget to leave a like for me, comment in the box below, and don't forget to subscribe. I'll see you in the next video.